Wednesday, November 10th, 2021, Monaco 64, home of alternative economics and contrarian views. Today, I have the pleasure of speaking with Jack Gamble. His YouTube channel is Nobody Special Finance. I was contacted by Jack a few weeks ago. He has an interesting theory about silver supply and how it could be affected by Evergrande and the Chinese housing sector or real estate sector. And I thought it was a really interesting view and analysis he did. So decided to have a chat with Jack. And welcome, Jack. And maybe you could tell us a little bit about yourself for the viewers.
Thank you. Thank you for the opportunity to come on and talk about this. As you know, the name of my channel is Nobody Special Finance, and that's not by accident because there really is nothing special about me. I don't have any formal financial background. I like to wear that on my sleeve and not try to pretend to be something I'm not. I'm really just a guy that reads way too much, and I'm fascinated by finance, and I think it is not nearly as complicated as people in the financial services industry or the financial press would like us to believe. I think if you just take the time to understand a few very basic things that most people can follow this and can handle their own finances. My background is mechanical engineering, so I mean, I do have a little bit of a mathematics background and that kind of thing. But again, nothing finance specific. Now, the theory that I have is, in a nutshell, that the collapse of the Chinese housing market and with it the Chinese construction market is going to indirectly lead to a shortage in the global silver supply. Now let me clarify a little bit. That's spread out. I think this is going to play out over a number of years. This is not going to be a very sudden thing. And this says nothing about the demand for silver. This is strictly supply side. And if I could share my screen, I am going to give you just a little bit of background. See, the key here is understanding where the silver supply comes from. And most silver that comes out of the ground is an incidental metal. It's not found in silver mines. And this is the key to why I think the Chinese construction collapse and housing collapse is going to cause a shortage of silver. Because if you can see from this chart, this is from a website called Visual Capitalist. And I apologize for the half pie chart. I've never seen a half pie chart before, but here it is, the first half pie chart I've ever seen. But it's showing the sources of silver supply and all the silver that comes out of the ground. You see all the way to the left there, only 27% of global silver supply actually comes from silver mines. Another 16% comes from gold mines. All right. So you're only looking at, about 42, 43% of silver supply actually comes from a gold or a silver or precious metal mine. You'll notice the lion's share of the silver comes from these lead, zinc, and copper mines, or these base metals. So really, the global supply of silver is dependent on the health of the market for base metals. And as I think we're going to see in the coming year or two, as the Chinese construction industry just collapses, which it's in the process of doing. I mean, we're seeing the housing collapse in China unfold before our eyes. Even today, it looks like Evergrande may have actually defaulted today. So this could be the day that the S hits the F over there, simply speaking. But I think this collapse in construction is going to lead to a shutdown of a lot of these copper mines and these lead and zinc mines. And when that happens, that's going to mean the incidental silver that they discover is no longer going to be hitting the market. And that means the lion's share of the silver available is only going to be what comes out of gold and silver mines. And you can see in this chart, that's only about half of the current supply. And, I did a little bit of research into what the silver supply has done over the years. And, this chart I found, ignore the part that's circled here, but this is the global silver supply in millions of ounces per year, going all the way back to 1950. And I want to draw your attention here in the mid to late 1990s, which is really when global silver supply started to really rise. It virtually doubled from about 1994 up until about 2015. Now, that big rise in silver supply coincides with this massive build out in China when the growth in China really took off. And you notice it peaked back around 2014, 2015. Well, that was the first signs of real weakness in the Chinese housing market, when the first of the developers were really starting to go under over there. And we've been kind of creeping down a little bit ever since. So the increase in global silver supply, you can pretty clearly see it coincides with the build out of infrastructure in China. And a couple of the things I want to draw attention to are, in particular, zinc and copper. And you can see that in this chart. This is the use of zinc, right? And zinc is a little counterintuitive until you realize that the main use of zinc is in galvanizing steel, i.e. I-beams, rebar, structural steel for buildings, right? And half of the zinc that comes out of the ground goes into steel galvanizing. So when you hear a zinc, you need to think steel. This is the global steel market. And if you look at global steel market by country, they're in red. 46.4% of all steel in the world goes into China. So with it, there goes about half of all of your zinc is going into China to feed this beast of growth that's been going on in China. And then if you break that down a little bit more, here's the Chinese steel industry, and you can break it down by sector. You can see about 48% of that Chinese steel is going into construction. But you've also got a large segment for like heavy equipment manufacturing, automotive, all things that are going to be affected by a collapse in the steel industry. And then on the copper side, again, got a lot of charts here. Here's showing copper demand by region. And the blue part of the bar, this is year over year. The blue, that's your Chinese copper demand. Right? So more than half of global steel, more than half of global copper is going into China right now. And as far as what it's used for there, we've got building construction is about 30% of that. Electrical and electrical products is about 38.7% of that. So think your power grid being built out in China, all things that are going to be drastically affected by the collapse of the Chinese market. So what it really boils down to is, as we're seeing, the real estate market in China is effectively frozen right now. I mean, even the Chinese media numbers show about a 30% month-over-month decline in sales in some of these Chinese cities. And it's a good bet that any information that the Chinese are going to let the media print, the situation on the ground is probably a lot worse than they're willing to let on. So, I mean, this construction is really just grinding to a halt right now. It's not slowing. It's not tapering. It's just grinding to a halt. So very soon, I think we're going to see this demand for steel and copper and zinc in China is just going to start declining. It's going to fall off a cliff. And it's hard to picture right now because we have these things going on like the LME copper shortage we had a few weeks ago that drove prices up. And we're seeing a lot of things. It looks like shortages of these metals right now, but that's mainly due to the smelters and due to the refiners and the energy costs that are going on there. It's not really having anything to do with the mines or with the supply of the ore. And if you think about it from a miner's perspective, the miners are about to get squeezed on both sides because the miners are going to get hit with a fall in demand from their biggest customer, China. They're not going to need the copper. They're not going to need the zinc. And at the same time, we saw in the CPI read today, a 30% year-over-year increase in the energy index in the U.S. So the biggest input cost for your miners is going to be your labor and your energy. So your miners' costs is going to start going up substantially at the same time where their biggest client is going to slow down its demand for their product. So you're going to see a lot of these zinc and these copper mines are going to go out of business. And when that happens, they're not going to find the silver that they've been finding. And our global silver supply is going to return to what it looked a little bit more like in the 1990s, which is about half of where it's at today.
And I guess some people would argue, well, that would the slowdown in Chinese real estate construction could drive commodity prices lower. But by what you're saying, though, is quite interesting because it could also lead to the shutdown of a lot of mines, which would lead to a shortage. So it's not really clear cut that prices of these base metals are going down. And then you have on the silver side, I was listening to Andy Schechtman. He was on Liberty and Finance last night, and he was saying how investors, big investors, people, billionaires and everything are all trying to buy as much silver and also gold to some extent. And with all the bubbles that we've had, the stock market bubble, the crypto bubble, um, just I think people are concerned, especially seeing CPI today at 6.2%. You could see people, if they move a little bit of money from cryptos, the stock market, from bonds into silver. What's your view on that?
Yeah, I mean, you hit on a couple of really big forces there, right? I mean, there are some pretty massive forces in play right now. You've got the inflation story in the West, which it's really hitting globally, but I think it's hitting the Western countries a little harder because of the debasement of the currency was a little more powerful in the West. That's a huge, huge tailwind for gold and silver, or at least it should be in a free and fair market. At the same time, you've got this massive collapse in the housing market in China, which the Chinese housing market is a $52 trillion real estate market. And if we see a massive collapse in the Chinese housing market and the ensuing financial crisis, well, that would be massively deflationary. So those are two almost opposing forces that are going on at the same time. And to be honest with you, these numbers are so big. This is kind of where my background just comes up short here to say which of those forces is going to win out in the long run. And again, that's why I emphasized at the beginning that this is strictly supply side, right? It's because if you see a big global economic collapse, you may see a spike in demand for silver, but you're also going to see things like industrial output could shrink, right? And a contraction in industrial output would affect the demand for silver because silver is a predominantly or 50-50 industrial metal. But as far as the collapse in China goes, I think it's pretty safe to say that a collapse in construction in China is going to cause these base metal prices to drop. I think even in today's inflationary environment, just the scale and the amount of the market that flows into China right now in copper and zinc, there's so much of it is going into that one country that is about to see this major catastrophe in construction. I think a fall in prices of those metals is all but certain right now. I mean, there's not a lot of people talking about it right now because the idea of prices and anything going down is just not doesn't have a lot of traction right now, especially in light of these CPI numbers. But China isn't a unique case right now with what's going on in China. They're looking at a very deflationary event that's really in the very early stages right now, you know. And again, today could be the day that sets it off. It looks like Evergrande may have actually defaulted today. We'll see what comes out of that.
Yeah, I saw that on Monday. The Federal Reserve published I think it was their semi-annual paper or study, and they warned about Evergrande. And it's interesting that today I think you've seen it as well. There's a German company called Deutsche Markt Aktien. I think they're like a investor. How can I say? They're trying to protect investors. So what they did is they invested in Evergrande bonds, and they said that today was the last day for the interest payment of some bonds that had already breached the period, not the period, but the coupon date, and they were in the grace period. So we haven't heard anything from the mainstream media about this. What's your view on what's going on there? Is it to do with the fact that some big banks might be trying to get out of these bonds?
Yeah, you know, it's interesting. This we'll call them DMSA.
Yeah, DMSA.
I commend you for trying to pronounce it. I won't even try. I don't get out much. I'll butcher it.
Yeah.
But they did it's very interesting what they did. They went out and bought the bonds themselves. I mean, they were sick of these anonymously sourced articles that have been coming out where they claim people with knowledge of the matter say that Evergrande made payments prior to these grace periods, but then the company would never comment and the banks would never comment. So really, the only evidence that Evergrande has made any of these payments within their grace period has been unnamed anonymous sources, which is flimsy. You know, it's weak sauce. So DMSA did a report last week, or it may have been 2 weeks ago, saying they think Evergrande actually defaulted And for whatever reason, whether it's the banks protecting their own interests while they unload these defaulted bonds to unwitting investors, that they have been actually in default this whole time. And so I guess to prove it, and the guy's name is Dr. Marco Metzler over at DMSA, I guess they went out with their own money and they bought some of these bonds that the grace period expired. It is now expired because it's now the 11th in Hong Kong, and they did not receive any interest payments. So they have initiated bankruptcy proceedings against Evergrande. And they were sick of taking unreliable press reports at face value. And so they actually, they staked some of their own money. I'll give these guys a lot of credit for going out and doing that. I don't know how much of these bonds they bought, but they went out and bought them themselves and said, yeah, we can tell you we did not get our interest payment. So they have defaulted on us and we're going after them in bankruptcy court. So good on them for doing that. That's
really there's this story. Sorry, go ahead.
No, go ahead. I'm done.
Yeah, there's this press release here from this website, dpa-international.com. Says China Evergrande Group, Evergrande officially defaulted. DMSA is preparing bankruptcy proceedings against Evergrande Group. So I'm going to put a link to this below in the description, but this is quite interesting what it says here. Particularly problematic for Evergrande. All 23 outstanding bonds have a cross default clause. This means that if a single one of these bonds defaults, all 23 outstanding bonds automatically have default status. The MSA senior analyst Metzler said, I guess they put no's. Yeah, and even for copper and some other base metals, I think this, I'm not a proponent of it, by the way, this Green New Deal and climate change, but it looks like they're pushing for a lot of renewables, and I think copper is a big part of it as well. So maybe the slack in Chinese construction real estate will be taken up by this. Have you looked into that? And also silver, we usually don't hear like from Goldman Sachs. I think the guy from Goldman Sachs, he was the guy who said that I think when there was the silver squeeze, that there was no real big demand for silver. I forgot his name now.
Jeff Curry, probably.
Yeah, Jeff Curry. He mentioned copper. It could be huge for the renewables, but he didn't want to mention silver though.
Yeah, and you have to, I guess it's hard to keep this scale in mind here, right? You have to understand just what a beast China's metal demand has been for these last 15 years. Even if you're talking a doubling or a tripling of the build out of renewables in the US and Europe, I think you're still not even going to make a dent in the amount of steel and the amount of copper that China has been consuming, just building entire cities from scratch that nobody lives in. There's a city of Ordos. They just built a city in the middle of the Mongolian grass plains, and nobody lives there. And this stretches from, they have these GDP mandates that the central government hands down in China to the regional governments, and they say you will grow your GDP by this many % this year. And if you're a Chinese local politician and you want to rise in the good graces of the Communist Party, which is the only way to rise in China, then you need to do whatever is humanly possible to make sure you hit those GDP targets, which means you're going to borrow money and you're going to build a city that nobody wants. And it's what they've been doing all over the country. And you're going to start to see a lot of talk about these things like shadow banking and off-balance sheet activities, which is the secret debts that these governments and these developers have taken out to finance these operations, because the government put these rules in place, this 3 red lines policy, to limit how much debt they could take out, because they saw the bubble forming. They saw it was too late by the time they saw it, but they saw the bubble forming and they're trying to deflate it now. And like every oppressive government does, every time central bankers or central authorities realize there's a bubble and they try to deflate it, they end up popping it. Right? Ben Bernanke, with his rate hikes in 2005 and 2006, did the same thing. And a lot of people in the Western press are saying, but you know what? China has this super powerful central government and they don't have a gridlock Congress or a parliament that needs to bicker about things. They can just get it done. And it's almost like they're kissing the ring of the Communist Party. And respectfully, I think that is totally backwards in how to look at it. My philosophy is because they rule with such an iron fist in China, their ability to mess this thing up even worse is unlimited. That's how I view it. And so far, that's what they're doing. Because with this three red lines policy and the things that they're doing, they're only accelerating the demise of this market.
Yeah, and I remember over 10 years ago seeing a documentary about the ghost city. So this has been going on for a long time. And how damaging do you think it could be for the Western financial system? We know HSBC is huge in Hong Kong, and Evergrande is a big part of the Hong Kong market. And that could spread over to the big banks in Europe and in the US, right?
Yeah, we're already seeing some early signs of that. There was, I think Oceanwide is the name of a developer that defaulted last week or 2 weeks ago. And I think Oceanwide was the name of the company. And Oceanwide was the owner of this major development project in San Francisco here in the States, the Oceanwide Center, which is this major construction project that's supposed to be the second tallest skyscraper in San Francisco, been plagued by problems as they've been building it. The building next to it has started to sink. So there's all kinds of issues. And because they defaulted on their offshore bonds, the investors seized this construction project in San Francisco. So now the fate of this project, which is supposed to be these two massive skyscrapers, it's uncertain whether that's going to happen. So already there's a direct result in a U.S. city that's going to affect jobs. It's going to affect a city that's already struggling with its own issues in San Francisco. There is a lot of Chinese ownership of real estate here in the U.S. I'm not sure if it's the same in Europe, but I know as these wealthy Chinese businessmen are being targeted by the central government, they're being used as patsies in a lot of ways, but they're being forced to sell their assets to bail out their company's debts. So you could see mass liquidations of wealthy Chinese holdings of U.S. and European assets. So that could put some downward pressure on prices here. And of course, the banking system is so intertwined and so interrelated. HSBC is huge. It looks like HSBC may be the most exposed to the Chinese developers. Interestingly enough, HSBC has also been very vocal in the press recently, saying they're all in on China and they think the worst is behind them and all clear. We're going overweight Chinese stocks now. Like, please, talking up their books, trying to sell this stuff to
Yeah.
other investors.
So, yeah, I think, there's a lot of Chinese investment here in the UK. I think aside from the US as well, Canada is huge, especially I think Vancouver, the Vancouver area. So it could ripple through the whole world. And even Australia, I think Evergrande has a presence there. And before we wrap up, could you maybe tell the viewers your view on the whole system and why you're into silver, why you think it's the right place to be, and where the viewers can find your work aside from your YouTube channel? You have mentioned that you've been on Reddit, on Wall Street Silver, that you are an ape. like I am. I know that movement is kind of quieting down, but I think it's far from over. We've just been consolidating this year before a major squeeze, I think.
Yeah, I got my video start on Wall Street Silver, really just out of frustration. And it was with the silver squeeze earlier this year. I had watched as the ape community kind of began to splinter a little bit when the GameStop and AMC crowd did not like the attention that silver was getting, which, I did not subscribe to that theory. I thought they were symptoms of the same issue. I thought the AMC and the GME folks were kind of targeting the stock manipulation, whereas the silver squeeze folks were targeting the currency manipulation. And I think they are symptoms of the same disease, of the corruption and the rigging of financial markets as a whole, which includes the banks, the hedge funds, and the central banks, which in my mind started, you could argue, in 1971 with the closing of the gold window, or you could go back further to, was in 1913 with the creation of the Federal Reserve. But it's a theme that has played out throughout human history, the powerful preying on the weak and the working class. And the weapon of choice of the powerful to prey on the working class has been to debase the currency for the last at least 40 or 50 years in the US. So that's what has really drawn me to silver, because I see interest rates going lower and lower and lower, and I see debts going up and up and up, and the numbers are getting so big, and zero is getting so much closer on interest rates. They're actually negative in Europe, that I think this charade is just about up. Maybe it can go on for another year or two, but if you would have asked me a year ago, I would have said it would have already failed by now. But that's what really drove me to silver. So when I saw the apes infighting, I just went down to my basement and I grabbed my phone and I just made a video. I said, hey, I'm nobody special, you know, like I'm not a trader or anything like that. And I just kind of ranted about how Silver Squeeze was not a hedge fund plot to try to distract from GameStop or AMC or anything like that, that there was real DD behind this, and that, you know, we were on the same side here. And it went over pretty well in the Wall Street Silver group. So I started making a few more and a few more. And, you know, next thing I know, I'm doing these videos every day. And I said, okay, well, I'll start a YouTube channel. And, well, here I am.
That's great. Great. How long have you been stacking silver?
Actually, my first silver bar, I mean, I've been collecting, like, you know, junk silver and sterling silver and things like that, that I find doing treasure hunting with my kids for a couple of years. My first silver bullion I bought was I believe it was last April, when a company called Invella made these 10-ounce silver bars with a picture of the coronavirus on it. It said minted during the coronavirus pandemic. I think I paid $16 an ounce for it back then. And, you know, I just kind of figured, hey, this would probably be worth something. I'd imagine if it was something that said minted during the Spanish flu pandemic in 1918, I think it was, that would probably have some numismatic value now. So I bought a couple of those. And then, of course, the second I held a silver bar in my hand, forget it, I was hooked. As soon, the first time you hold a bullion bar in your hand is a powerful event.
Yeah, that's what happened to me in 2002 when I bought my first gold coins. They were Krugerrands, 1 ounce. Then I bought a silver bar. It's completely like, you know, it changes your view on things, and it makes you dig deep and learn about gold and silver. And then you learn that they've been such an important part of money and the economy and civilization. And hopefully we will help more people wake up. I think there's a lot of interest in silver, and I think silver is going to outperform gold a lot because it's so undervalued. Is that the way you see it too, Jack?
Yeah, you know, I look at silver, and there's that industrial element to it, right? Silver is 50-50 monetary industrial. And I can't help but notice things like platinum and palladium and their stories as they became so heavily industrialized, and, you know, shortages set in, and those prices really just took off to now they more closely resemble gold prices than silver prices. And I can see silver doing that because the industrial uses of silver are increasing every day, even as the monetary demand for silver I see increasing big time as a result of this inflation story. And then if you look at the rarity element of it, I think the natural ratio of gold to silver is somewhere around 7 or 8 to 1. And then if you look, the price of gold to silver is around 70 or 80 to 1. So, I mean, just based on the scarcity of the metals, I think silver is in for a major correction upward towards gold. And I mean, I think gold is massively undervalued right now too. So, you know, you can't go wrong with either or. I mean, I tend to be about 10 to 1. I prefer about 10 ounces of silver to every 1 ounce of gold that I stack. And it's just easier to do the math. And I could see the prices ending up somewhere closer to that in the long run.
Great. Jack, thank you very much for your presence here on the channel. And I wish you all the best, and hopefully we'll be talking again soon.
Thanks a lot. Appreciate the opportunity.
You're welcome.